Hey guys, so it has been a while since I have filmed a video. Thanks so much for tuning into Young Money Investments, and in today's video we are going to kind of just get back at it. This is going to be my first week after a week of working down in Arkansas, getting back into the swing of things, getting back into trading and everything. And in today's video we're going to be talking about ZSAN. We're going to be talking about some of the patterns and things that I have seen in it. We're also going to be talking how I left $2,000 worth of profit on the table and how I messed this swing short up today. All next on Young Money Investments. Check it out, guys. All right, guys, so like I was saying, this week I didn't get a whole bunch of trading in the previous week. Obviously, there wasn't a lot of videos. I don't know if I even released a single video as of this past week, but we're going to jump into a couple trades. While I have been away, I've been in and out doing a few swing trades here and there, but nothing to really write home about. I want to get rolling in these videos again. So we're going to be talking about ZSAN. This is a company that I am short in right now, about 3,800 shares total. I have one position that I swung over the weekend. That was a 3,000 share position. The average cost basis is $6 on that. And if you look at the charts here, you'll see how I was up actually over $5,000 at the beginning of today and got messed up. So taking a look at the charts, this is going to be ZSAN here. This is Friday. This is going to be today. And I've added in some support and resistance lines here. So as you can see on Friday, I had a high of 620. Like I said, I was actually short into it, about 3,000 shares at that point, and it has continued to run down here into the 422 mark roughly. Did not cover, should have covered, was an idiot, didn't get a cover, just was really busy that day. And again, that's the problem of not being in front of your computer 24/7 is I probably should have covered. Granted, it was not my big, large support and resistance, but it would have been nice ideally. Again, today it came down to here, and I figured, oh yeah, I should wait till it gets down here to $4, and it never even cracked that 422 mark. So basically in today, where I went wrong was I did not get out as it came down into this. I thought, okay, the volume was very light, it was very weak, and I thought it would crack through this and we'd get a little rundown to probably around $4, and I would be able to sell out of my position for probably a gain of somewhere right around $5,500, almost $6,000 on that trade. That did not happen. What happened was it continued to rip, came back down here, found some support, and then continued to consolidate, rip, and then I ended up adding in roughly today about 800 shares, average cost basis of about 510. So I'm not in there super great. I wish I would have been a little bit higher, but hey, that's just the nature of the beast. And because of my account value, I can't continue to add. I don't want to have that higher risk tolerance. So here's a couple things that I made a mistake on today. First thing was I didn't cover early. I should have seen and just figured, hey, I should take this. When it broke through this level of support here, which this is a very short period of time, again, I should have covered. It had broke through the previous pattern. The previous pattern was smashed. I should have said, okay, hey, I'm gonna get out right here. And if I would have got out right, roughly right in here, I would have saved myself roughly another 17% run. I mean, if you look at where we're at now, that's only about 4%. So I'm not sitting horribly, but it's still not great. Good, better, best, this is where I made my mistake. So drawing support and resistance for this kind of a trade, you look back here on the past 5 days, you're gonna see that it has lows here of 215, but we are going to zoom in a little bit more on this. Highs of 665 up here, which is crazy. And you can see that again, there is a good level of support right here at about 475-ish, roughly is where I would say there is good resistance through here until it broke. You're gonna also see a good consolidation through here. So I would draw another line of support right there at about 530-ish, 535. And that's what I have done through here. And then I also drew another level of support, as you can see, where over the weekend it trended up, came back down and touched. And now we're just kind of seeing some more consolidation, and then it ran today. Again, it's coming back, finding consolidation through here. As of today, this isn't a previous level of support whatsoever, but I saw through the intraday pattern. Let's zoom in here a little bit more. This right here, this level of about $5 has continued to act as a level of support. So if it can break through this overnight, we will see it start to crack down, and it should be able to break this get down back into this 478, 475 range. And then from there, if we can continue to see that drop down, we'll continue to see that go further. That will be actually a nice big drop down here to about $4, but there is going to be some difficulty with that. That is really my analysis on the technicals. Other than that, guys, that is really going to be my plan on ZSAN. I plan and believe that this company is definitely not worth this. I think my exit strategy is going to be getting out here somewhere right around the $4 price range. If it can break that, it will continue to drop quite a bit. But in reality, like I said, that's not my goal to continue to swing this overnight. The crazy thing about these penny stocks, and this is something that a lot of investors won't tell you, is that penny stocks right now are pretty risky. Penny stocks are so manipulated. I think that's something that we as teachers sometimes fail to tell you guys is penny stocks, this run up, I mean, let's take a look at this. This run up right here, this company should not have went from 2 something and ran up here to $6. I mean, like, that should not have happened in a day, no matter how good the news is. These are usually garbage companies, and there is a reason that they are trading so low. There's no reason that it should triple in value like that, yet it did. And so that is the one thing you do need to be cautious on. You really need to know that, unfortunately, as the markets continue to run up, you're going to see more stupid money, more retail money, more new traders see these stocks that run up, and they're going to go, hey, I want to strike it rich. I want to make a whole bunch of money in this too. And they will start buying. And that is why shorting these stocks, especially swing trading these stocks, can be very risky. And you just have to know what you're doing. You need to have stop losses. You need to have set parameters. And I am using my stupid mistakes as a good example. Luckily, I'm still up. Luckily, I'm still in the green and everything. But I'm leaving a lot of profit on the table right now, and that is the scary part. I think I'm probably sitting up about, let me take a look here, sitting up roughly about 3,000. So I left about $2,000 on the table on this trade. So I think I'm at about $2,700 up right now on my $3,000 swing. So again, that is a mistake that I made. At least I'm still in the green. At least I can hold this through. But I should have been a smarter trader. So thanks so much for tuning into Young Money Investments. If you have any questions, please leave them in the comment section. I'd love to hear from you a little bit more, and I'll talk to y'all later. Bye.